Good evening. How's it, Michael? How's it, Antonio? How's it? Sorry, gents, I just need to fix up this little stand. I was trying a new stand tonight, but it's not working so laka. So we have to try the old one and get it fixed in here. There we go. Okay, that is substantially better. Whoopsie. Almost substantially better. Now it's substantially better. There we go. That should work. Good evening, Razak and Tabo and Buxy. How's it, everybody? Thank you for tuning in. Thank you for saying, how's it? Get this thing. That's the problem. There we go. That's substantially better. Good evening, folks. For those of you that has not been with us on a Tuesday evening, I do a bit of a Q&A session. Any questions that you have with regards to financial advice, retirement annuities, investments, stuff like that, I tell you a bit about what my opinion is with my experience. And I would appreciate it if you pop in a question or two and let's see what I can help you with. Maybe a bit of guidance, whatever the case might be. One thing I can tell you today, folks, is I had to go into one of our major banks today. And I just realized again why I hate banks. I spent 3 hours in the bank today trying to get one of my bank accounts sorted out, to get my money out of my own bank account, because the bank never did any FICA on me. And when I went to them and I took the necessary FICA documents in, well, they still didn't even realize that it was outstanding. But the moment I took it in and I started loading it and not everything was there, they decided to block my account. And then they kept on telling me today, no, but it's my fault. I should have done this. I should have done that. And I can't have access to my own account and my own money. And must be honest with you guys, I was ready to throw my toys. This afternoon. Luckily, lo and behold, after you've talked very nicely to people and you've proven them wrong on every aspect that they have given, and then you start threatening to break their laptops, they actually start listening and they start helping you. So I'm happy to say I got my money moved, and I think I'm moving banks again. It will only be about the 3rd time or the 4th time in my life, but I will now be going to the last major bank in South Africa, and I hope that their service will be better than the crap that I have to endure today. Any guys, let me see what you're saying here. Jen, Naikune, what advice would you give a 39-year-old single teacher, 3 properties and a small RA? Wow, Jen, that's fantastic. I hope your properties are paid off. If your properties are paid off, I think it's a good asset and it's a good start. My personal opinion has always been that one should have at least 5 properties. And the reason why I say 5 properties, and I know it doesn't work on a straight line, okay? But my opinion is that you want to spread your risk. You want to diversify your risk. So let's say, for example, you've got 3 properties like you have at the moment, and they're all paid off, and you get a rental income on all 3 of them. The problem is if one of them is standing empty for a period of time, 3 months, 6 months, year, whatever the case might be, it's 33% of your income that you're losing. So if you've got 5 properties, then you've already diversified to the point that your risk is only 20%. So I know it doesn't work in a straight line. Please understand again. The other thing is, my personal opinion with regards to property is that one property is not an asset. One property is normally a bit of a pain in the ass. But if you've got 5 or more properties, you're building a property portfolio and it can work very well for you. Also, property is only an asset once it's paid off, because up until the point that it's paid off, it's still the bank's asset. So I'm very much not a fan of property, and I've said it in a number of videos. And I know there's people that make millions out of properties, that are brilliant property managers. And I get so many comments from people that are in the property industry that wants to tell me it's the best thing since sliced bread. And yes, absolutely, I agree. If you've built up a property portfolio, it is fantastic as an asset and as an investment. But if you don't have a number of properties, then it's not an asset. It's a liability up until a point. So for you, if you've got 3 properties and a small RI, I think you're on a wonderful wicket. You're going in the right direction. And all you need is maybe a bit of guidance with regards to your entire situation, your portfolio, income, expenses, assets, liabilities, what you want to achieve in terms of your goals. There maybe you might need some planning, because even though you've got 3 properties in RA, it's not to say that you are in a good position, or maybe you are in a great position. That I can't tell you, so I can't give advice. But once I see your situation, I can give you much better advice, not only on the investments, but also on the tax implications that goes with it. So you're welcome to contact me. In my profile is my WhatsApp number and my website. You're welcome to go and contact me there. I'm happy to set up an appointment with you, do a consultation, and literally just give you advice based on what you tell me. I don't even care if you take up any products. For me, it is a question of I do charge a consultation fee, so I will get paid for a consultation with you, but I'm not too worried about the products. I'm more happy to be able to give people advice that make them win in the world. Only RC, hi Corne, what are your thoughts on the US elections and what impact does it have for us in SA? So RC, I am very happy that Donald Trump won. I was very happy when he won in 2016. He is the first politician, I think, that has made his millions up front in terms of business. So he will be looking not only at how to save face, how to be the nice guy, how to keep everybody happy. He will make decisions like a proper businessman, and sometimes you have to make difficult decisions. So I like the fact that he has become president again. I think the US economy is going to pick up again. I think we're going to see other good things happening. I hope that he keeps to what he said he's going to do with regards to places like Israel and Ukraine, because then this terrible black cloud that's been building up about World War III and more wars or whatever would be out of the way. Don't know if he can do it, but I'm hoping so. In the short run, I saw our rand took a bit of a knock when he became president, kind of expected. But honestly, I think that he will be good, not only for the American economy, but for the worldwide economy. And I think South Africa can only benefit from it. And because I think it's going to be good for the US economy at this stage, it will make global equities much stronger, and therefore anybody that wishes to invest in South Africa, any South African, will do well to make use of portfolios that makes use of asset swap, makes use of asset swap equities. So asset swap basically means that you, whether it's 1,000 Rand a month or whether it's R1,000,000 that you're going to invest once off, invested in South Africa in a South African product, they take that R1,000,000, they put it in America, they invested there in those stock markets or whatever the case might be. That's the asset swap. And then once you want your money back, then they swap it back into South African Rand and they pay it out to you. So I like the idea. I'm very happy that he won. Right. Your opinion on getting rid of a financial advisor. Your opinion of getting rid of a financial advisor to save an advisory fee is 1%. So, Farad, this is my opinion. If he's a crappy advisor, you have to get rid of him. and it's very easy. You go and find a different advisor and you sign your investments over to the different advisor. Then secondly, you negotiate the fee. Remember, financial advisors work on these fees that are negotiable. We can't just take the fee, you have to agree to the fee. So if you would come to me and say to me, Corey, I want you to take over my portfolio and I want you to manage it for me, and I'll say, okay, for 100% mate, I'll do it for you. And now we have to negotiate the fee. I will tell you that I normally charge 0.57% as my ongoing fee. If you're going to turn around to me and say, no, I want you to manage this for me, but I don't want to pay you, it's going to be 0% fee, or I'll pay you 0.1% fee. For that, then I'll most probably tell you, sorry mate, go and find somebody else, because at the end of the day, I need to eat, and my service to you and my advice to you comes with years of experience, lots of education, and therefore I know it's worth what I'm charging. At the end of the day, a good financial advisor, even if he charges you 1% in terms of his trail fee, okay, will be making you such a good return, you won't mind paying that 1%. So my opinion on getting rid of your financial advisor that's charging 1%, like I say, if his advice and his service is crap, get rid of him, find somebody else. Go to somebody that you can trust. You can always just go and contact the investment company and say to them, you don't want the financial advisor anymore, and they will take him off and they will take the fee away. But then the thing is, then you have to manage your own investment. And it's basically the same as the property investment we were just talking about now. I very often say to people, if you want to buy property and rent it out, how good is your knowledge on the property market? Do you think you can actually manage the renter and all the crap that comes with it? That's exactly the same with investments. How good is your knowledge? Doesn't help to go and manage your own investment. You're only getting a 6% return on investment. Then you might as well pay somebody 3% if they're going to get you a 9% return on investment. Okay, so think about it as to what is most important to you, and go and negotiate with the new financial advisor what you will pay him. Okay, Zenobia. Ek gaan volgende jaar op pensioen. Is dit te laat om nou 'n RA uit te neem? Nee, Zenobia, dit is nie. Jy kan enige tyd 'n RA uitneem. Inteendeel, ek het kliënte wat ons RA's voorgegee het na aftrede. En dit klink nou seker 'n bietjie snaaks, maar basies waaroor dit gaan is die persone wou nog steeds die belastingkorting gehad het wat 'n mens kry op 'n uitreuniteit. So ons het na aftrede vir hulle gaan uitwerk wat hulle kan gaan bydra om die tax rebates te kry. Ons het vir hulle RA's gaan doen, en nou kry hulle elke jaar daai tax rebates, wat beteken dat hulle minder belasting betaal in hulle pensioenjare, en boonbehalwe vir dit het hulle 'n RA wat iewers in die toekoms weer kan uitbetaal en vir hulle nog inkomste kan gee. So dis nooit te laat om een uit te neem nie. Dit mag miskien nie op hierdie stadium vir jou behoeftes die beste moontlike belegging te wees nie. So ek dink dit is die vraag wat jy eerder vir jouself moet vra, is, gaan dit die beste belegging wees vir wat my behoeftes nou is? En dit gaan weer eens afhang van 'n klomp ander goeders, van net jy enige ander kapitaal, het jy pensioenfondse, voorsorgfondse, wil jy geld hê oor 'n jaar van nou wanneer jy op pensioen gaan, wat jy kan gebruik as inkomste, wil jy dit gebruik as geld om mee oorsee te gaan op vakansie? En daai vraag kan ook weer eens net geantwoord word wanneer 'n mens 'n bietjie sit te gesels oor wat jou drome is, wat jou doel is, wat jou doelwitte is. Ek dink so baie keer kyk finansiële adviseurs staar hulle self absoluut blind teen die syfers. Hulle praat met kliënte en hulle kry by kliënte al hulle inkomste, uitgawes, bates en laste, en dit gaan in hierso, en dadelik begin hulle kop te gaan, nou hoor jy, so ek moet vir hierdie ou dit en dit en dit doen, in plaas daarvan om te luister na die kliënt en wat hulle behoeftes is. Want jy mag miskien in 'n scenario wees wat dit lyk asof R5,000 'n maand RA vir jou die ideale ding gaan wees, maar as ek gaan luister na wat jy regtig sê en ek luister na jou prioriteite, dan gaan ek moontlik agterkom, hoorie, so maar jy moet eintlik minder spaar, jy moet vir een of ander rede nou 'n bietjie lewensdekking hê, whatever the case might be. So RA is sharp, maar dit is nie noodwendig wat jy nodig het op hierdie stadium nie. Ronel Peterson, Your advice saved me. Yay, Renel, thank you. Thank you very much. I almost resigned without a plan B after 20 years of service. Thank you so much. Renel, thank you so much. I tell you, wow, man, this makes me feel fantastic. I would love to hear your story. I would love to hear your story. So please, send me our email address that we use on our website is talktous@heptagonc.com. Talk to us at heptagonc.com. Go and send me an email and tell me your story, please, even if it's just in short. I would love to hear it. I would love to tell it to people. I would love to go and put it on our website because this is an endorsement of note. Thank you, Renal. Appreciate it. Oh, what happened now? Oh, this happens every time. I shouldn't say what happened. This happens every time. Okay, let's see. Jen, thank you. Much appreciated. Oh, it's only a pleasure, Jen. Only a pleasure. If you were 20 looking for aggressive risk investment, what would you do? Adam. Mate, I wish I could give you a straightforward answer, but it comes back to what I said now. There's many options, and it depends from person to person. So it depends on how much money you have when you're 20 and you want an aggressive investment. And the reason why I say it depends on how much money you have is if you are just 20 years old and you've got limited funds and you want to go into an aggressive investment, then something like a global equity fund, the MSRI fund, one of those funds that at this stage gives on average a 14-15% return on investment might be a good idea. But if you say, listen, yeah, now I'm really aggressive, I'm willing to take a little bit more risk, then you can start looking at alternative investments, and then you can start looking at things like livestock funds and venture capital investments, or you can look at buying shares directly. Business, people don't understand business is high risk. If you are going to go into a business or want to buy into a business, that is really high risk. But those are good returns if it comes off. So there's a number of different things. I would say almost irrespective of how much money you have, even when you go into aggressive risk investments, you should still diversify. And the reason why I'm saying you should still diversify, so let's say, for example, you decide to buy shares directly, you decide to go into a venture capital investment, you decide to go into a livestock investment, you decide to go and buy gold, stocks, whatever the case might be, and you buy 5 different aggressive investments. The chances that all 5 investments will fold immediately at the same time and you lose all your money is much smaller than only one folding. And this is what we look at when we put share portfolios together for people, is we look at that specifically. Like, if you invest in just one company today, if you go and you invest in just one company and that company folds, all your money is gone. But if you invested in 20 different companies and one of them falls, then you've only lost 5% of your investment. And here I come back to something like Steinhoff. Remember when Steinhoff went down the drain? So people that were just invested in Steinhoff lost millions. People that were invested in high risk equity portfolios lost 2 or 3% because in their portfolio they had 30 or 40 different companies, not only Steinhoff. So I don't know if it answers your question, but yeah, I would still diversify even if I go very aggressive with my investments. JVW, how or where do you see what is being charged if you are with a guy for a long period? You're talking about the cost on your statements. On your statements, number one, it should be in your investment contract. That's the first thing. So it should be in your investment contract. The fund fact sheets for where you are invested, you can actually go and Google them. They're all available these days. You can Google them. You can go and see what is the charge of the fund fact sheet. On the investment contract, you can see what the management fee is, the admin fee, the advisor fee, all of those things. And then if you are most probably, I think with any of the investment houses, it doesn't matter whether we are talking Sanlam, Old Mutual, Liberty, Allen Gray, Coronation, Investec, all of them should have access for you via a website these days. So you should be able to register, get a username and password, and then you can go and check all the statements. It's on the statements. And everybody has to show everything. That is legislation. If you can find one investment that doesn't show all the costs and fees that involve, man, you're most probably going to make a lot of money, because you can take them to the FSCA and make a case against them. Okay, I hope you come right there, mate. Okay, so Nobia, it's so obvious. Absoluut, gee ons 'n likeie. Tanya, oops, and there goes Tanya's. Hold on a second, Tanya. Let me just get to. There we go. Okay, so Tanya, your question is: compounding interest only available on long-term investments? No, compounding. Okay, so let's just back up one step. Compounding interest is not available on investments. Okay, compounding interest is available on savings account. So bank savings account. Slight difference between the two, because on bank savings account, the bank tells you how much your interest is. On investments, you buy into a portfolio that's got shares and bonds and property and everything in it. And the growth that you earn there depends on how good that portfolio is doing. Okay, so compounding only means that you get growth on growth on growth on growth. So if you've got 100,000 Rand invested and you get 10,000 growth this year, then next year you've got 110,000 Rand. If you get another 10% growth, then you get 11,000 Rand growth, because now you get the 10% on the 100,000 and you get 1,000 Rand on the 10,000 Rand. So that's what compounding growth or compounding interest means. So this is the only reason I'm trying to explain it to you that way, is any investment that is 2 years or longer, or is going to run 2 years or longer, and they say to you it's not simple interest or single interest, but it's compounding interest or compounding growth, as long as the investment is 2 years or longer, you will have that compounding effect. And that compounding effect is fantastic. It's not called the eighth wonder of the world for nothing. Ronald, thank you very much. I appreciate it. I appreciate it big time. Are these trading processes a positive extra income or too risky? Well, I suppose, Chris, it depends on what trading processes you're talking about. There are so many different trading processes these days. In the past, in years gone by, the only trading that there was basically shares on a stock exchange that you could buy and sell. That was the only trading that there was. But then you got Forex that came into play, where people started playing with the different monetary systems, and where they started playing off the dollar against the pound, and the pound against the yen, and the yen against the rand. So Forex became a thing. Then a few years ago, what became very big was bots. Everybody was buying into bots, and they were basically buying into artificial markets and synthetic markets, as they call it. And one of the best explanations I heard about those things is that you were actually gambling because you were betting on whether this synthetic market is going up or down. There was nothing really that could go up or down. Then cryptos came into play, and then people started trading with crypto. Now these days you've got things like arbitrage, where people trade on that. So there's a lot of different trading processes, and it depends on which one you are interested in going into. So crypto, these days I feel is much better to go and invest into as what it was years ago. Because when it just started, it was way too volatile. But now we can kind of see what is happening with crypto, almost like you can see what's happening with shares. So share trading, crypto trading, arbitrage, those things are much better to trade with these days. Whether it's positive for a extra income, that I can't tell you, because it always depends on whether you're going to have good or bad trades. If you're going to have bad trades, you're losing money. If you're going to have good trades, you're going to have extra money. Arbitrage is just about the only thing in terms of the trading platforms that I believe is safe or safer. Let me correct that, safer than the rest. But yeah, you're going to have to, irrespective of the trading platform that you use, you're going to have to know that you are taking some risk. Just back on that, I've got a mate that started trading about 6 months ago. And he's not making a ton of money, but he says he's making enough every month to pay his expenses. And this is a guy that I never thought would ever get into something like that. I'm still scared for him because I still think he's he's hitting things by pure luck. But he is proof that it can work. But before you go and start trading on anything, go and do some research. Go and teach yourself. If you're not going to make use of somebody that's professional, does it on a daily basis, first go and learn about it. Go and get more information. One of the biggest problems with investors has always been and will always be into the future, that investors hear about something that sounds good and then they climb in. They don't do any investigation. And then millions are lost because a lot of the time that is pyramid and Ponzi schemes. Okay. Adam, it gives great insight. Appreciate it. Only a pleasure, sir. Only a pleasure. Let's see, where were we next? Whoops, sorry folks. Just go to, that's the man. How or where do you see, there, we answered that one for you. Is compounding, Tanya, I've answered that one for you, I think. I just saw, okay, where is it now? Oh, there we go. Only RC is, do you have any experience with the Easy Equities app? Is this a cost-effective way to buy stock? Yes, I've seen the Easy Equities. I've actually played a bit with it with somebody else. Personally, Easy Equities, opening a bank trading account, most banks, as much as I don't like them, most banks is an equity trading platform that you could go and buy and sell your own shares. I've looked at it in terms of seeing how it works, and it's an easy way to go and buy and sell shares yourself. In terms of the cost impact on it, I don't think it is as cheap as they make it out to be. But then again, if you're gonna buy and sell stocks, if you're gonna buy and sell shares, unless you do it directly on the stock exchange, it's going to cost you money. Now, none of us can go and buy directly on the stock exchange because you have to be licensed and this, that, and the other. And the guys that actually do it, they normally charge a pretty penny for what they are doing because of the amount of risk that they take. Interesting fact, seeing that we're talking about this. Interesting fact. The highest death rate and earliest age of death up until a few years ago was stockbrokers. Stockbrokers died earlier in life because of the stress that's on them. They get heart attacks, they get strokes and everything because they are playing a high risk game day in, day out. They can win and lose millions. So they do charge a pretty penny. So I cannot tell you in terms of the Easy Equity app what the cost is and how cost effective it is. I know it's a pretty easy platform to use, but I do think that they do take a percentage, and they should also, they will also declare that on the app. So once again, maybe you should just go and Google them, go and check out the website a bit, and you'll see what they charge, and then you can decide for yourself whether it's a big or a small cost implication. Oh, another one. Comment. I think I just answered this one. What is your opinion on investing with Easy Equity? I'm thinking of transferring my TFSA to Easy Equity. So you want to transfer your tax-free savings account to Easy Equities? Here's my opinion. If you've got a tax-free savings account that's invested in a portfolio that's giving you a proper return, and once again, I refer back to the global equity fund. So if you go into one of those that's giving like a 12 or 14% return on investment, and you take into consideration that there's no tax implication on TFSA, I won't move the money out of there. I mean, where are you going to get that type of return on a continuous basis? With Easy Equity, you're taking a chance. You're taking money, you're putting it in, you're hoping that you're getting a 20 or 30% return. So I will not take my TFSA investment and put that into Easy Equities. But if I've got extra money, yes, I will definitely, if I feel like it, go and play around. I think this is one of the things that one has to realize with regards to something like Easy Equities. It's easy to just go and buy and sell a share. But once again, if you do not understand the market, if you don't understand the company you're buying into, if you don't understand what's going to happen into the future with that type of business or industry, then you are basically, it's like playing the horses. There's 15 horses, you're hoping that number 7 is going to win, and you're putting money on it. It's like gambling. Yes, I know there are the blue chip shares that are pretty safe and one shouldn't have a problem with that. But if you're going to play with equities and you're specifically going to play to win and win big, then you're not going to buy blue chip. Because blue chip shares at the end of the day is going to give you the same return as portfolios. Because a bunch of blue chip shares put together gives you a general balanced portfolio. So anybody that's going to buy shares on something like Easy Equities is most probably going to look for shares that they hope is going to give a nice, good 20, 25, 30% return. But then you have to be happy that you can take a good 20, 25, 30% negative growth and get hurt. CR, comment man, just the platform. Oh no, why did that happen now? Just a platform, nothing wrong. Absolutely, agree 100%. It is just a platform, and there's nothing wrong with the platform. It is whether you actually want to play in the platform or on the platform or not. And I personally, I've been a financial advisor for 30 years. I've had so many clients that said to me, "Don't you want to start buying and selling shares or whatever?" My standard answer is, I want to sleep nice at night. I want to know that everything is good. I don't want to worry. So I won't go into shares. Not personally. This is one thing I do have. I do have a personal stockbroker that is part of my portfolio of advisors that I use. So once I meet with clients that wants to buy shares and know that they're going to do well without having to worry about it themselves, then I make use of Etienne. I bring him in and we talk to the clients. But they have a mandate, and their mandate says nothing below 5 million rand. So if you've got less than 5 million rand, you're going to have to talk nicely so that we can speak to him and see if he's willing to help out. Okay, I think the guy selling the bots, it might work for an X amount of profit, but it's about the sales. CR18, C18. I can't tell you. I know a couple of guys that sold bots. And originally, it was just money, great, fantastic, whatever the case might be. But it's only great and fantastic as long as the bot is making money. If it's not making money, then everybody very quickly gets upset. I think at the end of the day, the guys that are selling bots, and there's lots of them, and they bring out new bots on a continuous basis. I think for them that is what it's all about, because it's a back test that gets done. So basically, a bot is let's backtest what this thing is going to do. If we did this for the last 5 years, for the last 5 years, it would have done X. Okay, so let's create a bot that looks exactly like that and go and sell it on the backtesting. So everybody sells that on the backtesting and saying, well, it's done this over the last 5 years, so now we've created one. We believe it's going to do that into the future. Not easily. Just like stock exchanges and funds. We can use the historic figures as a guideline as to what we expect, but we have to go and look at what the future is going to bring in order to make an informed decision. Okay. Oh, thanks, Juan. Thanks for reminding me. John, JMF is my social media guy that helps me out. And Johan, bye donkey. Happy to see you. He keeps on telling me I must tell people to go and follow me on Instagram and Facebook. I keep on forgetting to do that. So please go and follow us on Instagram and Facebook. We just want to see what we can reach in terms of followers. They use the client's money they make on bots to have more to invest for themselves. Well, this is the thing. This is what business is all about, CR18. Business is about finding something that you can sell to the public that they want, and then because you are able to sell it, that you're making money and then you're investing your money. This is business. I know it's not lekker. I mean, if you're gonna be angry with somebody for creating bots and then selling them so that they can make more money, then you have to be angry at Elon Musk for making millions. You have to be angry with Donald Trump for building a property empire. You have to be angry with Alex Hormozi for building his empire of gyms and businesses. Then you have to be basically unhappy with every person that has a business and that's making money. So I'm not saying you're angry, but I hope you get my gist. My gist is it's a business. And even in my business, I am in my business to make money. I love giving financial advice to people. I love helping people with their investments and everything like that. But at the end of the day, I need to make money so that I can invest money so that I can be comfortable. I also want to take the overseas trips and go on retirement one day, and it's only business. Okay, let's see. Inside story, Corey. Let's say I have 100,000 Rand. What do I do with it? Any ideas on where I can invest it? Inside story? No, I don't have any ideas. Let me rephrase that. I've got a ton of ideas of where you have to invest it. But I can't tell you because I don't know if you may be sitting with R1 million of debt. If you're sitting with R1 million of debt, investing 100,000 Rand might not be the best answer. I don't know how old you are. I don't know how much risk you can take. I don't know how long into the future you want the return on your investment. There's so many factors that needs to be taken into consideration. Asking something like this, I can tell you, okay, go and invest your 100,000 Rand in company X. But it will be absolutely irresponsible of me to do it, because if you do go and invest your 100,000 Rand with company X and it goes under, you're going to come to me and you're going to say, you told me to do so. And then I'm in trouble because I gave you advice. And that is why I do not give advice and make suggestions with regards to investments, except if I've spoken to somebody and I've gathered information. I talk a lot about the Global Equity Fund and about the Smooth Growth Funds. It's because my own money is invested there. I see how well it's doing. It's not the only funds I sell, but I do not mind talking about those because I've got money invested in that. Same as with the arbitrage and and the alternative investments. I'll tell people about that because I've got some money invested there and so far so good. But yeah, won't tell you or won't advise you where to put your 100,000 Rand unless I can have a consultation, and then based on information I get from you, I'll tell you where to put it. Okay. There we go. Let's see who's next. Event Evil Movies current TFC. Oh, sorry. You see, CR18, that's exactly the problem. I know so little about easy equities except for the few weeks and months that we played around with it. I didn't even know that they have a TFSA now that could buy ETFs on easy equities. So no. ETFs, by the way, electronically traded funds, I can't see anything wrong with it. I can't tell you how good it is or how bad it is because it's not something that I'm attracted to. But yes, absolutely. So thank you for helping me out with that one. I missed that completely. Where? Okay. In what can I get the best interest on 200k? Well, Marie, I don't know. Because the best interest can only be gotten at a bank. So you will have to go and see which bank will offer you the best interest on 200k. I can't tell you. I don't deal with banks. As a matter of fact, I advise people to only keep a small limit of money in the bank, enough as an emergency fund, nothing more, nothing less, and then to invest the rest of the money in different investments. So best interest rate, go and check out the bank rates. You can Google them. It's going to depend on how long you're going to leave this 200k in as well. So your age, how long you're going to leave it in there, those two will determine how much interest you're going to get. Okay, so Marie says true, thank you. Split, maybe options are crypto riskier, ETF, some shares also Nasdaq. Yes. Now you see that CR18, it's exactly what I'm talking about. If somebody wants to do their own thing, instead of investing in one specific thing, then go and at least split your money so that you have it spread over a variety of investments, and therefore you are diversifying your risk. Now here's the one thing that I know not everybody wants to believe, but if you do this type of thing by yourself, if you have not done some research, okay, and you are just putting the money as and when you think, you might be hurting yourself in the long run. You might be getting good returns on investments, but if you do not understand things like the capital gains tax implication, it could be hurting you in the long run. So, once again, get advice. The one thing that you have to take into consideration if you want to get advice on something like this is that you speak to an advisor that's open-minded and that has actually dealt with some of these things. Because unfortunately in our industry, and I don't know who's going to crucify me for this, but so be it. Unfortunately in our industry, financial advice works on doing calculations for clients as to how much you need in terms of life cover and disability cover and this and that and whatever the case might be. But then also calculations as to how much you must invest to be able to retire, to go on holiday, to go and watch the Springboks at the World Cup, whatever. What it does not do, because it's always investment house products that are being sold by the companies because they want their investment sold to the financial advisor. So investment companies send broker consultants to us as financial advisors, and those broker consultants come and tell us about the new products and the funds and how well they're doing, and they help us to learn all the systems that does all these calculations. But because it comes directly from the investment house, you're not going to find that an investment house is going to talk to you about things like crypto or about shares or about the Nasdaq. So make sure that when you speak to a financial advisor, that you also ask your questions to determine for yourself whether this person is open-minded enough to know these things, to try and understand a bit about it, and to be able to advise you. If you start speaking to somebody about all this stuff, and they just say, no, it's rubbish, retirement annuity, then you know that oak is so, he's got such blinkers on. He will never be able to give you advice on investments outside of the investment house's products. Yes, I hope there's not a lot of financial advisors on this call, because I think I'm going to get crucified for that thing that I just said. I'm thinking of arbitrage. Marie, we do arbitrage in our company. Contact us. I do believe that we are dealing with one of the best companies when it comes to arbitrage. And yes, you're welcome to give us a call. Can explain it to you, and then we can point you in the right direction. I have looked at a few different arbitrage companies, and I just feel that you can't trust everybody. So I've done my due diligence, and on this specific company that we do deal with, we've got plenty of documentation in terms of due diligence that we've done to make sure that they are above board. I'll be able to take 200k risk. I think that will be absolutely ideal in terms of arbitrage. And the reason why I'm saying that it will be ideal, Marie, arbitrage is traded from the 1st of January every year until the 31st of December. So it doesn't work over the financial year as per normal. And on 200,000 Rand, they should be able to trade enough times that it fills your full 11 million Rand SARS allowance for taking funds outside of South Africa. So 200,000 Rand is ideal if you want them to trade all year and to trade the full 11 million Rand offshore allowance that SARS gives you. If you want to trade less, they will still try and get to 11 million. It's just going to be more difficult because they might not be able to get in so many trades. And if you want to trade more, or if you want to put in more, then they can trade less trades and work on a higher profit margins. So it all has a place and a way depending on what you want to do and how you want to do it. I hate it when this thing does this. Let's see who's next here. Okay. Share the live, guys. Thank you, Mr. JMF. I made the mistake of J. I don't want money in the banks. Return on investment only 43. I made the mistake of using banks. Luckily not the old yet, but learned my lesson over the years now. Great stuff, sir. Great stuff. Banks is great for emergency funds. And you can go and do the calculation over and over again. The break-even point is about 300,000 Rand in terms of tax. So if you've got about 300,000 Rand in the bank, the interest that you will be earning for the year is going to put you just above or just below the tax bracket. And when I say tax bracket, you can earn 23,800 Rand per year in interest without having to pay tax. So on 300,000, if you're in a savings account at the bank, and I'm not talking about a 5-year savings account, I'm talking about a normal savings account that you've got for the emergency funds. Your interest that you're going to earn is going to be just below the 23,800 or just above the 23,800 limit. So it will not have a great effect on your tax situation. And that's what I believe. That's what you leave in the bank. The rest of the money must be invested in other places where it's more tax efficient and where you're getting better growth. So go for it, CR18. I think you're on the right path, mate. And do research. Investing should be fun and you should enjoy reading up about companies. Oh, that is so true. That is so true. I've been working on it for 6 months and I feel guilty that I still haven't finished it. But I'm actually busy doing an investment course that I will be putting on the website at some point in the future, where I will be giving people guidance on investments and very much also on the psychology of investing. And I think if one just go and watch that, read that, see that, you will already have a better idea. Problem is, and CR18 is when you say and do research, people are lazy. People do not want to do their own research. They don't want to read. They don't want to go and watch stuff that is educational. It is unfortunately so. But if you do what you've mentioned here, reading up on companies or what, fantastic. Thank you, Stephen. I appreciate it, mate. Big time. I appreciate it. Thank you. There you go. I also got that to that sum around 225 to 300 to reach maximum. There we go. Perfect, mate. Perfect. CR18, maybe you should actually talk to me and give me some advice, seeing that your calculations are so good. Wonderful. Excellence, goeienaand. Jy sê goeienaand, almal goeienaand. Wat kan ons vir jou doen? Wie kan ons help? Hoe kan ons dwing? Yes, Johan, jy sal met een of ander tyd my vertel, wat is al die badges wat mense kry? Number 2 gifter badge en wat the heck is hierdie number 1 badge en nog een number 2 gifter badge? Is dit geld wat mense kry? Shit, that is great. My Gigi became the number 5 member on my team. What member? What team there? Tell me, people, tell me. Please go and follow Cornay's Facebook and Instagram. Thank you very much, everybody. Johan, thanks for reminding me again. At Cornayfin, Facebook, Instagram. At Heptagon, Facebook, Instagram. Fantastic. We'd love to see you. Sorry, folks, my cat is here again. She seems to think that Tuesday evenings when I do the live session, that it is her responsibility to come and join me. And at some point to start trying to give advice as well. And she's now under the chair here. And she's talking louder than what I'm talking. Okay, so we've got 5 minutes left. I reckon I've got time for 1 or 2 more questions if there's anybody. If there's nobody that's got any questions, I do want to tell you guys something. We talk... Thank you, RC. I appreciate it. Thanks, mate. We talk a lot about investments. And the one thing that I think that the question doesn't come up enough, or maybe I don't address it enough. But if you've got children, okay, you should consider taking out a retirement annuity for your child. If you take out a retirement annuity for a child, and I've done these calculations lots of times, that is just born, and you pay that retirement annuity, small retirement annuity, increase it by 10% per year to the age of 21. If that child at the age of 21 decides not to take on that retirement annuity, make it paid up, by the time that child gets to the age of 55, that retirement annuity will most likely have grown into enough capital to give that child retirement. Okay, so retirement annuities, I don't care what anybody says. I reckon retirement annuities are the best. I really love it. It's not the be-all and end-all, but I promise you, 9 out of 10 times when I do planning for clients and retirement annuities comes into the equation, it is one of the best solutions for them. D.A. Hughes, I learned a lot today. I want to make an appointment with you, please. By all means. In my profile is my WhatsApp number and my website. You can contact me on either of those. My email address for appointments is talktous@heptagonc.com. Talktous@heptagonc.com. So please contact me. I'll send you all the detail. I'll explain to you how I work, how we work. And then, yeah, by all means, we can set up an appointment. I'll do it with the greatest of pleasure. Ach no, excellence. Not again. I've answered this question twice, man. What can I do with 100,000? Give it to me, excellence. I need 100,000. I need to go and buy Christmas presents, brother. Or tell the people not to buy your children any more toys for birthdays. Yeah, and buy them crypto. Or buy them an investment or something like that. Tax-free plans. I tell you, my grandchild, I'm going to give my grandchild money every birthday. And I'm not even going to give my grandchild birthday money in the sense of giving him physical cash. I'm going to put it in an investment for him. He is going to be more happy with me when he grows up than any other grandchild is ever going to be with their grandparents who gave them a toy every year. I know that. Jen, appreciate your wisdom. Thank you for sharing, Connor. Only a pleasure. We know by now what those hundreds do over 10, 20 years. Absolutely. CR18, mate, I really want to talk to you. I think you and I can have a lovely discussion about investments. And I want to know what you do for a living because you seem to be pretty knowledgeable, mate. You didn't hear. You see, excellence, you must stay around, Chana. You must hang around. So on your 100,000 Rand excellence, I cannot tell you what to do with it unless I've had a consultation with you because it will be irresponsible. There's lots of investments, but every person is different. Every person's circumstances is different. And because every person and their circumstances is different, the 100,000 Rand will be invested differently for every person. So as well, go to the WhatsApp and go to the website, contact me there, and then I'll chat to you and then we can make a plan for you. Okay? Okay, excellence. Oh, absolutely. Younger kids today has a lot more options and access to resources. Absolutely. I agree with you 100%. And there's so much education there. I mean, I had to put together a cupboard for my wife the other day. I went and I Googled how to put this cupboard together, and I that cannot work with my hands spent 2 hours watching a YouTube video on Google to put this thing together. There is so much. The problem is these days that everybody is interested in the social media, the social part of it, instead of the media part of it. So yeah, I agree. Thank you, excellence. I appreciate it. CR16, thank you, appreciate it. Not close to this line of work, but it's always been a passion, mate. It's always lucky to chat to somebody that actually understands this stuff better than the average man. Okay, ladies and gents, last but not least, follow me on Facebook, follow me on Instagram, @CorneyFin, @Heptagon, and get in touch with us. We will help you, we will advise you, we will guide you. We love what we do in my business and we love helping people. All of the best. Until next week, chat to you then. Bye-bye.